Hello traders, it's Samurai Trader here. Welcome to this video. In today's video we're going to be covering a great deal of information. I'll try to keep the session to about 35-40 minutes if I can, but in today's session we're going to really drill down on how to identify the highest probability trade. So I'm going to be discussing with you where we enter, where we place our stop loss, and of course where we exit. Now it doesn't matter which market you trade, whether it be futures, Forex, or stocks, the exact same rules apply. Now in today's session we're also going to be looking at the Renko charts, using Renko charts. In the next one I'll use tick charts, but once again the same or the exact same methodologies apply. As always, my videos are raw, real, and unedited, so if I fluff up anything on the way through, make any mistakes, you're going to have to forgive me. Now I do need to pull up the disclaimer. There is a risk in trading. Don't trade with the rent money. Feel free to pause the recording to read the disclaimer in full. A very quick advertisement: if you haven't already, go to my website or click on the link below to download my free training manual. And I also have a great ebook which I wrote about 10 years ago now, The Truth About Day Trading. So you can also download, and very quick, download that one I should say, and very quick. I want to try to get through the advertisement very quickly. For $197 you receive all of my strategies. There are literally hundreds of handouts, over 200 hours of online video instruction. No, you don't have to watch all of it to master the setups. Once again, we focus on that one setup and we build from there. But I teach you over 15 of my world's best strategy. I've been doing this for 27 years, traders. Let me save you years of pain, heartbreak, and a small fortune along the way. Now this is a $10,000 program for only $197. I'm giving it away for free now. Now also, as a special, you can also attend my live coaching sessions. That is every month I run 8 live 2-hour sessions. I have over 200 traders attend these sessions. I've been doing it a long time. And in each session, just very quickly, in each session, let me go here. So I've been doing it. You can see how many months I've been running these coaching sessions for. There's literally dozens of handouts, there's PowerPoints, there's book reviews, there's all sorts of things that we cover, cheat sheets, etc. in every session. Traders, there is nothing else like this globally, and traders will say to me, well look, what's the ongoing cost? If you choose to continue to attend my sessions, it's $97 a month. How can I keep the price so low? Well, I've got around 200 traders attend these sessions each week, so I can keep the price down. Traders, this is the end of the advertisement. Let's get back to the PowerPoint. So $197 includes my complete program, the world's most, as my traders would describe it, as a gold mine, and 1 month of trading. End of ad. Let's now get into this. So in today's session I'll teach you how I read the charts and pinpoint high probability entries. As I mentioned earlier, in this session I'll refer to Renko charts, in our next session tick charts. The exact same rules apply whether you're trading stocks, futures, or Forex. Now when it comes to trading, we've got trend following strategies, trend following, trend continuation. You've got breakout strategies, there's reversals and divergence, reversals in the market, trend reversal confirmation trades, range bound. There's a whole range of different setups that you can actually learn. In fact, let me see if I've got it here. When you become a member, and we actually go through this in the live coaching sessions, as you can see here, there's a ton of different setups. Let me assure you, you don't have to learn all of these. In fact, you focus on only 1 or 2 trend following strategies to begin with, and we build from there. Once again, and unfortunately so many traders have been sold the lie that one setup, you'll learn it in a couple of days, away you go. Traders, you've got to treat this as a 60 to 90 day internship. You really have to. I get sick of the amount of traders that come in and want to pick it up overnight. I think it's that easy. Remember, we're trading against some of the world's best minds. Now fortunately for all of us, trading is not rocket science, but you've got to be willing to commit yourself to it. You've got to become a student of the markets. And here's another one of the cheat sheets that we've got. I call it the Master Traders Checklist, where we go through a whole lot of with trend training or strategies, and you can see there's a bunch of them. Change in trend, then we've got a range of counter trend. Now one may even say, well, how come you have so many strategies? Well, as you become an experienced trader, you realize, just like a tradesperson, you need to have a different setup for different market conditions. Once again, this is not rocket science, and we start you off with one strategy and build from there. But it's very, very important that you have the right expectation from day one. Now in today's session, we're going to be focusing on trend following strategies. They're the easiest to learn and the most reliable. In other words, about 80% of the time a trend will continue rather than reverse. Now you will learn how to effectively identify a change in trend, and the great news is, once again, it's not rocket science, but it's very, very important that you start off with trend trading. Now with the chart I'm going to be showing you, this is also very important. We're going to be looking at here a 4-point Renko on the micro NQ. The same rules apply whether you're trading the big contract or the micros, tick, or whatever. It really doesn't matter. However, what is important for this example is what I call our targets in each step. So we're going to be wanting to go for a minimum of 5 to 10 steps, which you'll see what that is in a moment, as far as profitability goes. Now in the next one, I'll actually use in the next video I'll use a higher time frame, but we'll just stick with the micro contract today, because the great thing about the micro is if you're a new trader, or if you've been a struggling trader, you can start with, well, on the micros, I know the brokers will say only $600 or $700. However, we've got to build into that the risk parameters. That is, we never ever risk any more than 2%. So even though a broker may say to you, yes, you can start day trading on only 25% of that, say $400 or $500. However, where that blows you out of the water is the risk management rules. So in today's example, I'm going to be assuming here that you've got $1,700, and we have a little miscellaneous margin, as we'll see if I can have enough time to explain that. But 1,600 by 2%, it means that your stop loss maximum size can be $32. Okay, so $32 as a maximum. Now if you start, there's only one way to trade, traders, and that's the right way from day one. Now what this means to you is this: if you start with $1,700 and you target only $50 a day, that is, you have what we call 2B setups a day, your account, you're now earning, or have the potential of earning, $10,000 a week within 30 weeks. Starting off with 1,700, every time you earn another 1,700, you start trading a second contract, and so forth. Now before you get ahead of yourself and you say, well look, trading 100 micros down here, traders, no you wouldn't, because as you increase the number of micros you're trading, you'd eventually start trading the big contract. So rather than trading 100 micros, you would trade 10 standard lots. Now $50 a day, what if we were to earn $75 a day? Well, what it shows me here, within 19 weeks down here, I have a potential of earning over $10,000 a week, and my account is up to 60,000, and I'm never risking any more than 2% per trade. And just one more here, we've got it. If you're earning $100 a day, if you're treating this as safe as a full-time business, you need 4 to be trades a day. Now for 2Bs on the that's basically $28 on the MQ. It works out to be $28, so you'd be grossing that less your commissions, but you're romping then in 100 a day. Now this is net after losses. Now just really simplifying this for this example, and for those young guns in the room that are watching this, if you continue to compound, that is every time you earns another 1700, you bought another contract. Look at this down here. Yes, you would be on the micros, on the main contracts, but never trading any more than 10, but your capital base in 50 weeks would be $1.7 million. Now don't tell me it can't be done, because it has been done. We go and look at many traders have had incredible returns. However, they're the minority of traders because they don't have a plan. Now jumping ahead again, let's look at this. Now before we go to the charts, this is really important. As you're about to see, I use the if I can say, it's the metaphor or the story of a pilot, particularly flying at night. That is, they rely on their instruments for landings and for flying, etc. We are exactly the same. As when we go to the charts in a moment, we start to look at some of my indicators. I'm reading the indicators, okay? And that's so important. You start to learn how to read the indicators. The other important thing here is what I call rule number one. It's the power of focus. Focus on that one good trade at a time. I look at it as what I call the sniper mindset. If I can do it once, I can do it again and again and again. That's so important. Now the other thing what I'm about to show you is that we have a couple of points of entry. That is, I can wait for 3 higher closes or 3 lower closes, which I like to do on the NQ. On oil, on Forex, many other markets I'm not so worried about it, but the NQ and the MNQ can be quite whippy at times, and so we call it the get ready, the get set, the go. And I'll explain that when I get to the charts. Now the next thing that I really want to look at here is here's the little checklist that we're going to go through. Do I have a setup? Does it meet my trading rules? We want to know, where's the entry, where do I place my stop, where do we exit? Now where we exit can depend on a number of factors. For an example, are we buying or selling into a pivot, a swing high or a swing low, or major EMAs? Now I use anchor charts. When you use an anchor chart, they behave and act exactly the same as a major support resistance area or a pivot area. It's absolutely amazing, and I'm going to show you some examples as we go along. Now one of the big questions also here is the charts that we use and the number of charts. Now traders, what we can see here is I've got 3 charts on display. The chart on the left here is what I call my entry chart. This is where I do all of my trading. This one here is called the anchor chart 1 and the anchor chart 2. Now if you're a brand new trader and you find perhaps, and it can be a little daunting having 3 charts up, you can start off just by having your entry chart and your anchor chart 1, and in time you can introduce anchor chart 2. Now the anchor chart 2, as you gain experience, you'll discover just how important that can be for divergences, trend continuation, and many other setups. Okay, so let's start with this particular screenshot before we go to the live trades. This is from last Friday. I'm shooting this on Monday, which is Sunday evening USA time, so I'm recording this during the Globex hours. And when I took this quick screenshot, we can see here that the data TradeStation doesn't have data replay, unlike say NinjaTrader 8. I think NinjaTrader 7 has data screenplay as well. TradeStation doesn't have that, so I took a quick screenshot as I was setting this up. Now remember earlier I spoke to you about steps. Now see each one of these here with the Renko, I call those steps. It makes it really easy, steps, and you have different steps on different time frames. Now remember earlier I said we would be conservative with our entries on the NQ, so that is get ready, get set, go. We enter on the third candle. See this line here? You would not be entering until the next candle on the close or the open of the fourth. This is a very conservative approach that we use, but what is important is what we call the steps, the number of steps. So here we enter on the close of a third, so we've got 1 2 3 4 5 6 7. Now 7 steps there is worth, and it exceeded that. Very important. Anyone that's familiar with difference between live trading and sim trading, you want to see price tick through your target to guarantee your fill. Okay, so 7 steps is $28, okay, before your commission. And let's just be very conservative and take a couple of dollars off, so it's $26 net. Okay, and why is that important? It's important because of this reason. If you've got a target there of say 75 a day, you want to see 3 of those trades a day. Okay, you want to have a target. You show me a trader with a compelling future, with a grand set of goals, and one that's making the market, they're becoming a student of their market and they're really interested in the market. I'll show you a trader that's going to make it. Unfortunately, a lot of traders think they're committed to trading, but they're not. They're only interested in trading. There's a massive difference. Now what I want to just once again break this down, I want you to focus on what I call the 80% trades. The 80% trades are the best of the best, okay, and many of these, as you're about to see, will be 80-90% winners. Okay, some of these are the 2Bs, 34Bs, just kick butt every day. So you're after 3 net trades a day. So let's now go to the charts and let's start from there. So this is the open, and it's what we call the Globex open last Friday. That screenshot that I just showed you. And for the example here for now, I just want to leave up my 2 anchor charts. So this is Renko. Now the little blue line here and the little white dots, that's what I call the 8x8 strategy. It's a strategy that Jake Bernstein, who's been in the business for over 50 odd years, written over 40 books. It's just another way of trailing the market. Okay, so you can use and going for larger targets, you can use the 8x8, you can use you might use an ATR. There's a lot of other strategies or methodologies that we can use to pick up larger targets. But let me just keep these 3 up and let me just explain what we're now looking for. Now when the market reopens at 6 p.m. Central Standard Time, when the markets close each day, and for anyone new to futures, it's not the same, quite the same for Forex. The market basically closes for one hour a day, then it reopens. And so you go from trading the New York session into trading what we call the Asian session. It's also known as, I call it the X Open, which is the Globex Open. So you can trade these markets 23 hours a day, and also it can be a great time to cut your teeth as a new trader at these times because the market's a lot slower. So when the market first opens, we usually have a delay of about 5 to 10 minutes before we start to get a setup. So number one, we want to know, traders, when we, and let me just do this here and just pull this over. Number one, what's the trend bias? Remember, we want to be trading with the trend only for these examples. What's the trend bias? Look at your anchor charts. That's what we mainly use the anchor charts for, the bias of a trend. What we can see here, we're in a definite uptrend, and this is where it can really take getting your head around and developing the trust in your indicators and in the market that the trend will continue. So I've just marked up a couple here, and from that screenshot earlier, and then we'll move on and I'll do some right-hand screening. I'll tell you what I'm looking for, not knowing exactly what's going to happen next, but very quickly, this was Friday's action. Okay, this is the time period when I was preparing this. So that, remember that first setup, I had 7 steps in that screenshot, and then the second one, I think I marked it up, or about here. So 7 steps works really well, between 5 and 7. That's on this particular time frame. The market sort of breathes in and it breathes out. So it breathes out, breathes in, breathes out, breathes in, and you'll get these moves all the time. Okay, so 28, 28, there are your 3 moves, and you could have maximized that, and I'll explain that in a moment, where you could have got up to in excess of $40 on that move. So there is your $75 to near $100 in the first hour or two of trading, and this is just Friday. This is a typical day. Now, what are we looking for, and how do I look for these trades? Okay, now see these lines here, this is called a pivot. That's a midline pivot, and these are pivots on different time frames. When you start to go up to a pivot, pivots are what we call a price magnets. Okay, so as you get to a pivot, experienced traders, this is where you could buy and get in and do a quick scalp, as you buy into resistance. Okay, that's what we call it there. All right, so very, very reliable. Now so why don't we start from here, and I'll just tell you exactly what we're looking for. We're looking for what we call a fanning of the EMAs. Now I'm using different moving averages here. I might use got a slight different formula on this chart compared to that one, but they're very, very similar. And you know what, whether using a standard moving average and an EMA, it doesn't matter a huge amount, because in the end it's about discovering what's the trend direction. So let's just go back to here for a moment, and let's just talk about this. Okay, so now we can see my 34's above the 89. Okay, see that there, that's the starting of what we call a fanning of the EMAs. Okay, my blue is the trigger line, that's above, but I got my 21, my 34, and an 89. This is a start. Now remember earlier I said to you that with the NQ and the MMQ, I want to have 3 higher closes. See that white paint bar? And by the way, I've got the white paint bar for 3 or 4 different types of trading platforms, and all my indicators are included, by the way. So here, that does not plot until I get basically 3 higher closes. All right, and my entry rule is on the 3. Now I can enter on the first one. And in fact, there's been a trade setup that's been around since the markets have been around. It's called a slingshot. It's where your long-term stochastic is overbought, short-term comes down and hooks up. Okay, so you can actually get in earlier, but let's use the very conservative approach of waiting for the 3 higher closes. Now I've now got the 3 higher closes. I'm after my minimum of 7 steps. I'm now say filled on that. I've got my 7, 1, 2, 3, 4, 5, 6, 7. It's gone past there. Very good. Now what am I doing now? Now I'm looking for a pullback in the market. Remember, we're not going to trade divergence or anything else. I just want to go through with you trend trading only. Now I'm waiting for a pullback back to my major EMAs, usually back to my 34 to the 89, and then a trend continuation. Now see this one right here. Let me just check that this there. Okay, so as a minimum I'm looking for a pullback, okay, to what we call a 2B, 2 bounces. That does not qualify, so I need a deeper pullback. Okay, so now I've got 2 bounces. I've got a bounce here, okay, and I've got a bounce here. So I've now got my 2B. When you do your training, you'll learn exactly in depth. However, once I've got 3 higher closes, I've got a 2B. Here is my entry on the close of the 3rd brick, and I'm in. Now this would be it over here. Let me just make sure we got the right one. So right there and right there. Now what is absolutely essential, traders, you always know where your pivots are. Why? Because pivots are magnets, and they will pull up, as a magnet does, price action, and bang, there we go. So now I'm at a pivot. Okay, so another that would have been a nice trade. So now what have I got here? And you can see our price is hanging around the pivot. Now I don't have any entries. I'm just looking here. I don't have an entry. Now just there I do have, for members that are watching this, we have what we call right there a 2D. Now very quickly, for non-members, what's a 2D? Don't be put off by the terminology I use. You pick that up in time, and this is getting back to really learning how to trade. You have what I call these aha moments. Aha, that's what samurai means. So a 2D is where you've got divergence on at least two charts. Here is my divergence, and I've got a tiny bit and some more divergence here. Now when you've got divergence, which divergence would you say is more powerful? Divergence on your lowest time frame or the higher time frames? Definitely on the higher time frames, traders. You've got a lot more power on these time frames. Now I'm going to ignore that for now, but that's a setup you do want to learn. Now we come down just here, and that there, when you've got a divergence or what we call a double, you've got to be very careful of trades straight after a 2D. We call them 2BDs. Now what the hell is that? Two bounces. Now see here how I'm bouncing and I'm bouncing. There's a 2B, but it's after a divergence trade. Why is that the issue? It's because many of these will come back and it's profit taking. Okay, and so it's very easy to jump into a trade after major divergence. Okay, now the second one is the one that I would take and enter. Now I already know I would have been stopped out on this one. Now I'm just going to be very honest with the trade setups. I want to ignore this one. The second one I would take. I would take the second one, and I have a losing trade. Now what's the bias of the trend still, traders? What's the bias? I'm still have a long bias. I've had some nice little winners. Forget the counter trends. Okay, let's just focus on the with trend, and I just had a loss. Now I call this a danger zone. Why? Do I have a fanning of my EMAs? Now what do I mean by that? A fanning of the EMAs is where you see your moving averages fanning apart. See that there? Here, this is where they become intertwined. Some call it railway tracks. This is where it's very easy to get chopped up. Now forget the ABC. I don't want to talk about ABCs. Now we now come down here, and I've now got to bounce off my 200. Now this is quite a deep pullback. Now I'm not going to get into second entries and things like that because we can argue about those, but let's just say plain vanilla entries that everyone would pick. Do I have an EMA bounce? Yes, off for 200. I've even got a little bit of divergence. Now let me just pull this over, and I want to show you this. See how I'm bouncing on my middle time frame as well. See that there? I've now got a 2B. Now when we've got our entry, or when we get a setup, remember we're going to be conservative. We could enter on the first candle. Let's wait for the third highest close. All right, let's just be very conservative. So our entries on the close of a third. Where do we place our stop? Our stop I really want to place 1 or 2 ticks below the low here. My entries on the third, my stops down below. Now what that works out to be, by the way, traders, on this particular market, if I entered a couple of ticks above, a couple of ticks below, that would mean I'd have a $25 stop. In fact, let me just show you this. Let's just go back to the members area for a moment, and because whenever I get new members particularly watch these public videos and they come back to me. So see here, you've got their chart time frames on my Google Drive. Members, any members that are watching this, there is a suggested time frames and how I calculate the time frames, and you've even got a video on how to do that, because there is a formula that we use between the entry chart, anchor chart 1, anchor chart 2. It's not a random one, but on the micros, where are we here? On the micros, there is where's the micro? I mean, you will find those sheets there, the cheat sheets. Here's the MES, we're after the MNQ, and here it is right here. Now what this is here, see where I've got here, if you're trading the 4-point, each step is $4, that's how much the steps are, and your risk is $25. If you were to enter on the first candle, not waiting for the 3 higher closes, your risk would only be $16.50. So we cover that extensively in training. It's very, look, once you understand how the table works, it's very, very straightforward, but that's important on your risk reward. So if I'm entering just above that third candle, got my stop down here, I've got a $25 risk. Now let's talk targets. Where is a great target? Well, number one, where's my pivot? I've got a floor pivot up, right up here. So there's my floor pivot. Now where's my previous swing high? There it is there. So I've got two main areas that I'd be targeting. I enter there, I've got my pivot, and I've got this swing high. I've got a couple of target areas. Now let's remember, when we go up to a pivot, you get what we call a PB, a pivot bounce all the time, and that's where you want to make sure you really pull your stops up to either break even or you lock in part of your profit. That's very important at this stage. So let's just go up. Okay, up, but how many steps have I got? 1, 2, 3, 4, 5, 6, 7. Thank you very much. Now you might choose to get out of that, because that's 7 steps, that's $28 at that stage. Remember, here's another, you've had a loss over here of 25, you just covered that there with this one. Okay, what if we stayed with it? Okay, all right, we get a bit of a pivot bounce again. Now just there, I don't have a deep enough pullback for another entry. Okay, we now break this high. Now I'm well and truly out of the market. What am I now waiting for? I'm now waiting for a new retracement, a pullback. Okay, now I identify those pullbacks where they start to qualify. There's really two things. Number one, whenever I get the super scalper, that white paint bar plots, or I get my 3 higher closes. So there I've got little divergence trade just there, by the way. See that just a little bit? Not going to be interested in divergence at this stage. Now we're coming back. Now look at this, see how I'm coming back to the 89. So once again, let me ask you, what's the bias of the trend, or the trend bias at this stage? Now I haven't been scrolling along on the higher time frames because I don't want to see what's ahead, but we can see, really blind Freddy can virtually see, we're still in a nice solid uptrend at this stage. Are we coming back? But I also know that time and time again you'll get a bounce off where? You get a bounce off the 89 EMA. So the order of it is the 34, 89 and the 200. They are my 3 key support levels. Now I know we've got floor pivots and things like that, but the main ones that I'm looking for my EMA bounces now is going to be the 89 or the 200. Now see that white paint bar, pretend you can't see that for a moment. Okay, maybe it's hard for you to see anyway. That would just show a green paint bar. That's your get ready. You get a second long brick, that's your get ready. So get ready, sorry, get ready, get set, your third one, and when that ticks up, my white paint bar appears, that's the go. Get ready, get set, go. So I'm going to take and recommend we take a long here, and I hadn't done any further than this. This is Friday, so let's just see where this goes. So let's talk targets. Now as a minimum, I really want to be going for 5 to 7 steps. Remember, that is $20 to $28. In fact, if you were trading 2 contracts, I'd recommend that you get your cash register in by taking 1 contract off at 5 steps, Why? It's because it's a very, very high probability trade, extremely high probability. Okay, you get the cash register in your second contract. That's where you might go and start the trail. Now I may as well quickly just and we'll go another 5 minutes here, but some of the strategies we can use to trail are these, using the Jake Bernstein strategy. So see these white dots and the blue, so I want to stay in it until I get a little crossover on my anchor chart. You will pick up incredible runners with this. For an example, it's absolutely killed it on the Aussie dollar today by going for or using your anchor chart 1 for your runners with what I call the 8x8, or using my ATR indicator. All right, but let's enter this on the close of a third. Once again, we're entering our close of a third. We want to place our stop a couple of ticks below there. Now here is the high of the Globex session. I want to do it now. I want to exceed that, right? But I want to get at least 5 to 7 steps. So let's just start now. So 1, 2, 3, 4. That's not good. I'm still not filled. Now I've got 5 to there. That's 5 steps. 6. Now here we've only touched 6 steps. Now let me explain something here, and this is one of the challenges we can have in going to break even too early. There you easily got out with 5 steps on your first $20 per contract. Your risk was 25. Okay, now when you go to break even too soon, when you get these reversals, and let's see, and as that one would have done on your second contract, you've just been stopped out at break even. So you picked up your 5 steps on your first. Okay, now you've come down and it's come down below the third candle. So we can see here you would have been stopped on the second at break even. Now what's my next move, traders? My next move is to look for another long trade. Now I look down here, I'm coming down to the 89. I'll probably either get a bounce right there on the pivot and the 89, or come down to the 200 potentially. So let's just see what happens here. Bang. Now I know you can see the white paint bar. At that stage all you would see is one green candle or brick being Renko. That's your get ready. Second one, get set, go. Now what am I after? I'm after a minimum of 5 for my first contract and 7 for my second. So 1, 2, 3, 4, what's that? 1, 2, 3, 4, 5, or there, touch 6, and let's just see what happens here. Okay, and you would have been stopped on the second. So you can see, and this is just a little example, 5 steps kicks butt big time. It really does. All right, let's do a little catch up here on what's happening on the anchor charts, and I'll sign off in a moment. We've been going 37 minutes. So I just want to see, well, there's another potential setup. All right, now see just here, you'd be out of this taking what I call a haircut. 1, 2, that only went up 3 or 4 steps. See how far we've been going sideways. Traders, we are momentum traders. When we start to go sideways like this, it's a sign that we want to cut our losses and get out. Something is not happening. We want momentum. I'm just going to see here. Okay, now look at this here. Now I'm starting to get a fanning of the EMAs in the opposite direction, and see this right here. This is what we call a 200 EMA overshoot. Do not be deceived by these. Okay, in other words, when you get your overshoots, these are generally great trend continuation trades. Let's have a look at this here for a moment. Coming down. Now if you were looking at that normally, you'd say there's my get ready. Oops, then it went one more. Get ready again. Now here it is, get ready, get set. Now this is quite a deep pullback, meaning when we have a very deep pullback, we generally want to see some really good divergence to confirm the move. I want you to remember that deep pullbacks, I want to have divergence even back in the direction of the trend. Now let's just wait, because I don't have divergence there. Now look at that there, see that there. Now I do have divergence. Now remember earlier I said we were going to focus on, in this session, trading with the trend only. But remember, we're trading a much lower time frame, and this is something magical I want you to see here. And let's just see how that, or is that it, right? Oh, here it is, just here. Now look at this. See here how I've got divergence, but what I want you to notice is what's happening on your anchor charts. I've got a 200 EMA overshoot with divergence, I've got an 89 bounce, and I've got a 34 EMA bounce here. What we've got here, traders, is what we call a loaded trade. These are loaded trades. Now normally we look at this, many traders look at that and say, okay, well what I've got is simply a divergence trade. Yes, on the lower time frame, but on the higher time frames, look at this. Now where's it go? Bang, look at that there. Okay, and you had another clean cut entry there, and you had a 34B just there. Now let's just look at this pattern once again. Price pulls back, and so they're very easy to identify and to learn. Note how price pulls back. Because I've got a 200 overshoot, yes, I could have entered just there, and that's what we call a T12, or if you want to be very conservative and a new trader, be conservative, you want to have divergence, and there it is right there. Okay, and so I've got an 89B and a 34B. That makes it a no-brainer, and away we go from there. Okay, now this one here, why would have that been a no-brainer? Let me just show you this. So we'll move these along in a moment. See how price is rallying up now. I've broken this level again. See these black dots? See what we call a T20. It's just a very simple identifying a possible change in trend. There's a little rule that goes with it, very easy to learn. Now look at this here. Notice how the 21's now flipped above the 34. See that there? What I'm now looking for, and look at the bias of the trend here, traders. The bias is still in an uptrend. I'm looking for a retracement back to my moving averages, and then a trend continuation trade. Remember, we are trading in the direction of our higher time frames. Now I've got one green candle, so what does that give me? Normally, get ready, two green candles, get set, but the third one was not a go. See that? So I'm waiting for another pullback again. Now here's a get ready again. I know it's white, but what you'd have there, remember here, I'd be waiting for three higher closes. Here I've got a white paint bar on this brick. Okay, so that's my get ready, get set. Now I've got a go. What's happening here on the anchor charts at that stage? This is what you would be looking at just there. See that reversal candle? Now I'm starting to get a fanning of the EMAs again. Now traders, remember earlier I brought up that little diagram of the pilots flying the plane. They're sitting back, they can't see above as you can see with their cockpit, you know, they can see clouds. That's a bit, they're reading their instruments. That's what we're doing here. Do I have a fanning of the EMAs? This is, traders, the start of the fanning of the EMAs, and away we go. Now once you start to get any more than 3 or 4 waves, that's where we've got to start to really watch what's going on here on the charts again. Okay, see that pullback there again. Now what does that mean on my anchor chart? Let's just see this pullback here, see that candle right there. Let me just confirm that with you. There it is right there. So see that candle right there? That is right there. I've got a bounce, I'm in, and away I go. So I enter on the close of a third, tuck my stop in down below here, and my target is to take out this high. But I am also thinking, where's my next floor pivot? Where's the next pivot area? Okay, why am I thinking that? Because we go up there and we get a pivot magnet kiss all the time. Now just before we do sign off, remember earlier I mentioned we can use the 8x8 8x8 strategy here, which I train my members in. It's just a very simple reliable strategy that you can use on any platform, because the rules to set it up if you're just using standard indicators. Now back here you may remember I had a trade entry right there, so I enter on that trade. Now by the time I get over here, I look over here and see how the blue line is above my white dots. Okay, so what that basically means is I stay until I get basically a pullback or a crossover, or I get a lot of divergence. So what that means is I could have easily stayed in from there right up to there. Now that's probably about a $75 move on the micro contract. Now on the big contract, the standard NQ, that's a $750 move just there. That's right, 750 on a standard lot. So what I've done here is really given you a good rundown here on my entries. We're looking for a fanning of the EMAs. Now what comes into the mix is this. We know that around 80% of the time the trend will continue, but we also need to learn when the trend may be coming to an end, because you can make a lot of money when you get those reversals, but there are patterns that we're looking for. And if we look at it this way, traders, that really patterns repeat every day. History repeats every day, and that's one of the huge advantages that we've got with these markets. Now if you're trading using time-based charts or tick, keep using those. Renko are a beautiful combination for new traders and experienced traders alike, but I also use within that mix tick charts. So I have actually, because I've got multiple screens here, I've got up tick charts as well as Renko, because one thing about Renko, they're beautiful for smoothing out price action, but you can also miss out on some additional action. So in summary, as we finish, for traders for $197 you can get over 200 hours of me teaching this. But most importantly, now you can also attend my live coaching. Now if you can't attend the sessions because they're from 6 p.m. Eastern Standard Time, that's New York time, to 8 p.m. Usually 2 days a week, 8 sessions a month, they are recorded. So you're able to ask questions in those sessions. We do psychology, money management. We'll usually analyze literally dozens of trades or potential trades every day. It's about learning how to read from the right hand side of the chart. Now after your first month, which is included in my complete program, all the indicators and everything, you can then continue for only $97 a month if you wish. So I've got around 200 traders in there, and over 30 of those, by the way. We've got a lot of full-time professional traders, and some have been with me for over 3 years. I am officially, as they call me coach. My job is to really fine-tune their trading. So traders, I will finish up the next video. I'm going to be talking about trading from the right hand side using tick charts, because with tick charts it can be complicated because you have larger candles, etc. So there are some other little tricks that you do need to learn when you're trading with tick. So I will sign off, traders. And for Forex traders, don't forget we do a lot of work on Forex is exactly the same. I will sign off. Traders, come and join me, and don't forget to subscribe to my channel either. Thanks traders, see you on the other side.